Hello and welcome to another class of your ACCA Management Accounting. In this class, we need to start our very new chapter, which is the chapter number 2, the materials. Okay, so in this chapter, we need to study what is material, what is the purchase of material, what is the accounting entries for issue and receipt of material, what is the inventory control and costing system, what are the inventory recording, what are the inventory discrepancies, and what are the inventory recording valuation methods. So these are the topics which we need to study in this chapter. Okay, so this is the one of the interesting chapter and most important chapter of your management accounting. Okay, so let's start with the meaning of material, that what is material and how they are recorded in the books of management accounting. Okay, so let's start with the topic, which is chapter number 2, material. Okay, now what is material? So material is generally concerned with the manufacturing activity. Okay, so it is primarily concerned with manufacturing activity. Okay, because if you are in a service industry where you are not manufacturing anything, then there is no discussion about the material, because you are not producing anything or in the manufacturing of anything. Okay, so it is primarily concerned with the manufacturing unit. Okay, so whatever you are manufacturing as the finished goods, okay, whatever you are manufacturing as a finished goods, but in order to make that finished goods, what do you need? You need a material. Suppose if I am the manufacturer of TVs. Okay, I am the manufacturer of TVs. So what I manufacture? TV. So TV is my what? TV is my finished goods. TV is my finished goods. Okay, so this is FG in short. So I am manufacturing TV. So TV is my finished goods. But in order to manufacture that TV, in order to manufacture that finished goods, what I need? I need a material. What I need? I need a material which is known as raw material, which is known as raw material, or in our terms in management accounting, we also call it as material. Okay, so this is material. So this chapter is all about what? This chapter is all about that material. Okay, so what we acquire? We acquire material or raw material. Then we push that raw material into what? Work in progress. We push that raw material into what? Work in progress. Like we are assembling things, we are manufacturing chipset, we are manufacturing screens. So when we do all these things, when we are assemble all these things, it is called as work in progress. And after getting out of work in progress, like something gets completed when work in progress has been done, then it will be turned into the finished goods. It will be turned into the finished goods. Okay, so this is the logistics cycle of what? Material. Like when you get the material, what you do on the material? You do work in progress and then you get the finished goods. So this is material. Okay, now suppose in the example where I am the manufacturer of TV, so TV is my finished goods. Now what is the raw material of that TV? So what do I things which are required to manufacture a TV? The screen. Okay, so I acquire screen as my raw material, then chipset, then speakers, and then the body of the TV, the plastic body of the TV. So these are my raw material. Okay, now when I assemble all these raw material, when I assemble all these raw material and do other work in progress, then it will turn into the finished goods. Then it will turn into the finished goods, that is the TV. That is the TV. Okay, so what is material? Material is primarily concerned with manufacturing unit where you manufacture or produce anything. So in order to get the manufacture or produce item, which is the finished goods, what you need? You need the material. And once you get the material, what you do? You turn it into the work in progress and you do work on it, and then you will get the final product, which is the finished goods. Okay, so this is all about the simple meaning of material. Okay, now there are few things before getting the material and after getting the material. That are the two activities: before acquiring the material and after acquiring the material, what will happen. Okay, so let's first discuss the acquisition of, or the topic which is in your syllabus, which is known as the purchase of material, which is the purchase of material. Okay, so now suppose I am the factory, or I am the industry in which the material is required. Okay, so now what is the process to get the material? Now what is the process to get the material? Okay, so there are departments in each factory, or in each industry, or in each companies. There are departments. There are purchase department, there are store department, there are manufacturing department, there are sales department, there are marketing department. There are different types of department for their different types of activity. So suppose if I am the industry as a whole, suppose I am the industry or manufacturer or the factory. Okay, so suppose I am the factory as a whole and I need the material. So what are the stages through which I have to go in order to get the material, or the material has to go through all the stages to get the to get into the factory unit. Okay, so now we need to study all these things. Okay, so there are different types of department. Okay, so there are different types of department. Also there are different types of stages. Okay, so each department is involved in different types of stages. Okay, and why they are involved? Because there are controls. There are controls to check the stage. There are controls to make check on the stages. Okay, so suppose if department, the purchasing, the manufacturing department requires anything. Okay, if the manufacturing department requires any material, then who will they ask to get the material? What I am saying, if the manufacturing department requires some kind of material, who will they ask to get that material? They will ask the store department. They will ask the store department. Okay, so the first department here is the store department. Okay, so they will ask store department to get the material. So what the store department will do? They will request the material. They will request the material. From whom they will request? They will request it to purchasing department or the purchase department. Okay, so store department will request the purchase department to please get the material. Okay, so what is the control here? The store department will raise the purchase requisition. The store department will raise the purchase requisition to purchase department that we need this good, or we need this material, please get this material. Okay, so first step is that store department will raise purchase requisition to purchase department to get the material. Okay, now after the store department has requested the purchase department to get the material, what purchase department will do? The purchase department will find the supplier. The purchase department will find the supplier. Why they will find supplier? Because they will raise their demand, like what is the material that they require, what is the time within which they require that material, what is the price in which they want their material, and what is the delivery time within which they get the, within which they need to get the material. Okay, so when all these condition will be fulfilled, when all these condition will be fulfilled, they will get the and place the order. Okay, so purchase department will find the supplier. Okay, now after finding the supplier, what purchase department will do? The purchase department will place the order. The purchase department will place the order. Okay, now when order has been placed by the purchase department, what will happen? They will receive the goods. They will receive the goods. But it is not the duty or responsibility of purchase department to receive the goods. Their only responsibility is to purchase the goods. Okay, just listen carefully what I am saying. It is not the responsibility or duty of the purchase department to receive the goods. Their only responsibility is to place the order to purchase the goods and find the supplier. Okay, so they are nowhere involved in receiving the goods. So who will receive the goods? The store department will receive the order. The purchase department, sorry, the store department will receive the order or the material. Okay. So who has first requested the material? The manufacturing department. So manufacturing department has requested the store department to please get the material. Then store department has requested the purchase department to please get the material. Then purchase department goes on and finds the supplier, that who is going to supply us the material in the quantity, in the price, and within the time frame which we require. And after getting the supplier, the purchase department will place the order, and after placing the order, it is the duty of store department to receive the material. And after the store department receive the material, what will happen? They will transfer their material to the manufacturing department, that here is your material, please do the manufacturing activity. Okay. But what will happen about the payment of that material? So store department will send the invoice to the finance department. The store department will send the invoice to the finance department, where they will make the payment to the supplier, where they will make the payment to the supplier for the purchase of material. Okay. So these are the all the steps and stage involved before acquiring the material. So when you make the order, when you place the order, when you find the supplier, when you make the payment, so all these activities are the getting into the material in the factories. Okay. So this is about the purchase of material. Okay. Now let's read this topic in detail from the notes. Okay. So now comes to the notes, where the first topic is purchase of material. Okay. So let's start reading. When acquiring material, acquiring means purchasing the material. When acquiring material, manufacturing companies usually follows a specified purchasing process. So they follow a specified purchasing process, the same process which we have discussed just now. Okay. With inbuilt control. So there are inbuilt control in the process itself, that we have already seen. Okay. So what we have studied, that when acquiring material, the manufacturing company usually follows a specified purchasing process with inbuilt control. So there are inbuilt control within the process. Okay. Now different department likes stores, purchasing, warehouse, and finance are responsible for different steps in the process and for recording of transaction in the accounting system. Okay. So all those different departments, such as stores, purchasing, warehouse, finance, are responsible for different role, different stages, and for recording of transaction in the accounting system. Okay. So purchase department will do the purchase recording of transaction, store will do the receiving and dispatch, and the sales will do the sales role. Okay. So these are the all the departments which are involved in this process, and they have their own control, their own responsibility, and their own recording of accounting system. Okay. Now the important point, MA means what? Your subject, management accounting. So, okay. So whenever we write MA means management accounting. So MA assumes a computerized system is used for transaction processing. Okay. So in the entire syllabus, in the entire course, your subject MA assumes that a computer system has been used for all these processes, that is purchase, receiving, payment, everything will be recorded in a computerized system. So this is the assumption of your course. Okay. That means entire purchasing process, from initiation to recording to communication and authorization and control, are within the computerized system. So your order will be placed from computerized system, your order will be received from computerized system, your payment will be made from computerized system, your transaction recording will be done through computerized system. So there are no manual things involved in the purchasing of material. Everything will happen from a computerized system. This is the basic assumption. Okay. So why there is the basic assumption? Because whenever we talk about computerized system, that means this is the real time transaction. This is the real time transaction. So whenever you do any entry or any update on the computer system, everyone gets the update on the same time. Okay. So this is the assumption of your management accounting. Okay. So what we have studied in the purchase of material, that it is generally follows through a different department such as store, warehouse and finance, and each department has their own responsibility and duty within their inbuilt control. Okay, and MA assume that there is a computer system of accounting. Now, purchase of material. Okay, so now we need to study about the process for the purchase of material. So there are different stages, there are different department who are responsible for each stage, and there are different control and activity related to each stage and each department. Okay, so we need to study this in detail. Okay, now let's start reading. That is, first stage is to request for material. First stage is to request for material. Okay. So stage is request for material. Now we need to see which department is responsible for this stage. Which department is responsible for this stage. So department responsible for request of material is store. The store department to will request a material from purchasing department. Okay, so store department is responsible for requesting the material, and what is the control here? It create and approve purchase requisition. Okay, so it is the responsibility of store department to create and approve purchase requisition in order to request the material. And from whom they will request? They will request it to purchasing department. So store department will request purchasing department that they need a material. So they make the purchase requisition and approve it. Okay. After receiving the purchase request, what purchasing department will do? They will find the supplier. Purchasing department will find the supplier. And after finding the supplier, what is the control here? After finding supplier, what is the control here? That it is the source suitable supplier. What is the suitable supplier here? Because you cannot place your order to any supplier. You need to identify who is your supplier, who is giving you the material which you need, who is giving you the material within the time when you need it, what is the price at which your supplier is giving you the material. So when all these things are satisfied, that is known as the suitable supplier. Okay, so purchasing department will find the supplier which is the suitable supplier, and after finding the supplier, what this same purchasing department will do? After finding the suitable supplier, what this same purchasing department will do? It will order the material. So ordering the material is the stage, and who is responsible? The purchasing department. And what is the control here? It creates and approve purchase order. Okay, so store department will create and approve what? Purchase requisition, but purchasing department will create and approve purchase order. Okay, so first, store department will request the purchasing department to get the material. And how they are going to request? By creating and approving the purchase requisition. After getting the purchase requisition, the purchase department will find the suitable supplier. And after finding the suitable supplier, the purchasing department will create and approve what? Purchasing order in order to place the order. Okay, and after placing the order, they will receive the material. And who is responsible for receiving the material? The store as well as store or warehouse. The store and warehouse, whatever the case may be, and whatever the department there may be in the factory, are responsible for receiving the material. So store and warehouse will receive the material by recording the goods received, which is also known as GRN, goods received note. In FA we have studied all these stages in detail with each documentation. Okay, so store or warehouse is responsible for receiving the material. Okay, we have also discussed earlier that purchase department is only responsible for finding the supplier and placing the order for the material. They are nowhere responsible for receiving the material. Okay, so material will be received by either the store department or the warehouse department. And after receiving the material, what will they will do? They will record the goods received. And after receiving the goods, what will happen? The invoice for the goods will be sent to the finance department, where they will process and pay for the invoice. And what is the stage here? Payment for purchase of material or the goods. Okay, so this is the process for the purchase of material, which is very simple and logical. Okay, you just need to remind the basic stages. First, the store department will request a material from the store department will request the material to purchasing department. Okay, and how they are going to do it? They are going to request a material by generating or creating and approving the purchase requisition. After receiving the request for the purchase of material, the purchase department will do what? They will find the suitable supplier, and after finding the suitable supplier, they are going to place the purchasing order by creating and approving what? The purchase order. And after placing the order, the role of the purchasing department ends here. Now, the goods has been received. So, who is going to receive the goods? The store department or the warehouse department are going to receive the goods. And after receiving the goods, the purchase the store or the warehouse department will send the invoice to the finance department, and finance department will pay for that invoice against the purchase of material or the goods. So these are the simple process for the purchase of material. Okay, now as we have studied what is the purchase of material and what are the process for purchase of material, I am giving you 2 minutes to read all this from the notes, then we will go for the next topic. Okay, so don't skip, don't fast forward this video, just wait. I am giving you 1 minute or 2 minutes as the case may be. Okay, and please read this, because before reading this you are not going to understand what I need to tell you in the next part of this chapter. Okay, so please read this, then we will continue with the next topic. Okay. So I hope you are done reading with the topic of the purchase of material and the process for the purchase of material. Okay. So now what we need to study? We need to study the another topic which is related to the material, which is the accounting entries for material on the material control account. So this is the topic that we need to study now. Okay. So let's start on the first topic, which is material control account, which is also linked with the accounting entry for the material. Okay, so both are the same topic which cannot be understood separately. Okay, so the next topic is material control account. Okay, the topic is material control account. those students who have already studied FA from me or from any other else, they know what is the control account. Okay, so they know what is the control account. So control account is the account which is known as temporary account when we talk about financial accounting. Okay, so control account are known as temporary account when we talk in financial accounting sense. Okay, that means they are here only for the recording of transaction. That means entries will come here, entries will go out from here, and this is only there for the control. Okay, this is not for permanently to be recognized in the books of account. Okay, so this is the basic meaning of the control account. But in material control account, when we are talking about in the sense of management accounting, what is the meaning? So just consider material control account as the pool of transactions. Okay, it is the pool of transaction or the box of transaction. Okay, so suppose this is the material control account. Okay, so what will happen, all the things related to receipt of material will come here, and every time the material has been issued will go out from here. Okay, so when you do purchase of material, when you do purchase of material, it will come here. Okay, so it is the in. Okay, and when you issue material to production, it will go out from here. Okay, so when you purchase the material, it will be in. When you issue the material, it will be out. Okay, now when we talk about material control account, so this is the account, and it is literally the account. What account? That we have studied in the financial accounting, where there will be a debit, where there will be a credit. Okay, debit will be the debit side, left hand side of the account, and credit will be the credit part, which is the right hand side of the account. Okay, so this is literally the same debit and credit that we have studied in the financial accounting. Okay, so every time there is a in of material, or when you receive or inflow of the material, it will get debited. Whenever there is outflow of the material, it will get credited. Okay, so purchase of material is what? Inflow. So material control account will get what? It will get debited. Okay, and whenever there is outflow of the material, that is issue of material to the production, you have sent your material to the production unit that please manufacture or produce item of finished goods from this material, so it is the outflow. It is the outflow, and outflow is the credit. Outflow is the credit. Okay, so this is inflow and this is outflow of the material control account. Now we need to understand what are the all types of transaction which can take place in the material control account. Okay, so you just have the basic understanding of the material control account, that whenever there is inflow of the material, it will get inflow and will be considered as debit. Whenever there is outflow of the material, it will be considered as credit. Understood? Now we need to understand what are the types of transaction are here. Okay, but before that, there should be a basic understanding of the material. Who you are? You are the manufacturer. Who you are? You are the manufacturer. So what you manufacture? The finished goods. Okay. And what is the finished goods to you? It is your inventory. It is your inventory. What you manufacture? You manufacture the finished goods. And what is finished goods to you? It is your inventory. And what is inventory to you? It is your current asset. It is your current asset. Okay, and if you have studied financial accounting, that is chapter number 8, IAS 2 inventories, then you may know that inventory also includes material. Inventory also include WIP. Inventory also includes the finished goods. Okay, that means if inventory is your current asset, that means material WIP and finished goods is also your current asset. I am right or wrong? Right. Okay, so material is also your current asset. Okay, so if we talk in summarized form, that means material is equals to asset, because whether it is current asset, whether it is non-current asset, asset is a asset. So material is equals to the asset. And what asset has? Asset has a debit balance. Asset has a debit balance. So material will also has a debit balance. Are you getting the point? If material is your inventory and inventory is your asset, that means material is the asset. And if asset has a debit balance, that means material also has a debit balance. That means we get the point that material is a asset. That material is a asset, and the opening inventory or opening balance of material inventory, the opening balance of material inventory will have a debit balance. Will have a debit balance because material is your asset and asset always have a debit balance. So if there is opening inventory, it will has a debit balance. Simple, okay, and too logical. Okay, so this is the material control account basic, just basic. Okay, so what we have studied first, the material is an asset and it will have a debit balance if there is some opening balance. Now every time there is inflow or increase of material, every time there is inflow or increase of material, it will gets what? It will gets debited. It will gets debited. Okay, and every time there is outflow or the decrease of material, what will happen? It will gets credited. It will gets credited. Okay, what will get debited and credited? The material control account. Material control account will get debited and credited in case of inflow increase or outflow or decrease of material. Simple. Got it? Okay. Now let's start about the basic understanding of the material control account from the notes. Okay, so here are the notes for the accounting entry of material and with the material control account. Okay, so what are the accounting entry for material? Movements of material, that is purchasing. You are getting the material. Issue, you are issuing the material to the production unit. And then return means either you are returning the goods or the material to your supplier, or either the production house or the production unit is returning the goods to you. Okay, so purchasing, issue and return are recorded in material control account. So whether it is the issue, purchase, return and supply, everything will be recorded in the material control account. Okay, now what is material control account? What is material control account? So this account records inventory movement. So it records inventory movement means in or out. Okay, in or out in an organization's accounting record by using double entry. This is the same double entry which is the in the case of financial accounting or the in the basic accounting. So same double entry will be done here in order to record the material movement. Okay, and it shows the balance of inventory at a specific point of time. Okay, so whenever you need to fill to get the amount or the value of the inventory, you can check it because your entries are recorded in a double entry form of system. Okay, so this is the material control account where inventory movements are recorded through double entry system, and you can get the value and the amount of material at any specific point of time. Okay, now let's come to the basic. What is material? So material is an asset. What is material? material is an asset. Okay, and material is an asset for the organization and has a debit balance. So material is an asset, that means it has a debit balance. Hence opening inventory is a debit balance in the material control account. Okay, so if there is opening inventory in your organization, then it will have a debit balance in your material control account, because material is your asset and asset has a debit balance. Simple, very much. Then, if there is any increase in material, then it will debited. The material control account will get debited. And if there is any decrease in the material, if there is any decrease in the material control account will get credited. Very simple. Okay, because the simple logic is material is a part of your inventory is a part of current asset, and current asset is a part of asset. That means material is equals to asset, and material is equals to asset. Asset has a debit balance. That means material also has a debit balance. So if material has a debit balance, and if there is any opening inventory of the material, it will have a debit balance. And if material is your asset, any increase in the material will get debited, any decrease in the material will get credited the material control account. Simple. Okay, so this is the very basic things about the material control account. Now we need to understand what all types of transaction are going to be recorded in the material purchase account. Okay, I am just writing all types of journal entries. Okay, this is the accounting entries, also known as the journal entry. So we will use the word journal entry when we are studying financial accounting, when we are going to use accounting entries term when we are going to study management accounting. Entries are same, but the meaning or the terminology used are different, because this is management accounting, that is financial accounting. Okay, so all those subjects are linked here and there as per the requirement and as per the chapters. Okay, so the next topic is recording of accounting entries for various transactions of material control account. Okay, so there are the many types transaction. Now we are going to give heading of each transaction and write the accounting entry with explanation. Okay, so the first entry will be the purchase of material. The first entry will be regarding the purchase of material. Okay, now comes the logic. What is material? Material is the asset, and asset has a debit balance. And what you are doing, you are purchasing the material. So you are purchasing the material, that means you are getting the material. So if you are getting the material, what will happen? Material control account will debit it, because you are getting the material, that means there is increase in material, so material control account will debited. That means the first entry will be when purchasing the material, that is material control accounts gets debited. To against whom? If you are purchasing the material, the logic is simple, that you are getting the material, hence your material account has been increased, that means debited, because it is your asset. But against whom? What has gone from your organization to get the material? The money. When you have purchased the material, what you have paid? You have paid either through money. So to cash oblique bank. If you have paid through cash, then cash. If you have paid through bank, then bank account. Okay, so this is the journal entry for the purchase of material. Okay, there is a second alternative to record this entry if you have purchased the material on credit basis. If you have purchased the material on credit basis, that means you have not paid for it currently right now. That means there is the credit term with the supplier. Okay, so if you have purchased the material on the credit basis, the journal entry will be material control account debited to supplier oblique payable account. Okay, so this is the journal entry when you purchase the material either in form of cash or in form of credit. Okay, so this is the entry, and the narration will be being purchase of material record. Simple. Okay, then after receiving the material, what will happen? After purchasing and receiving the material, what will happen? You issue your material to the production. You issue your production material to the production so that they can work on it and get the finished goods. Okay, so the second part is, or the second entry is, issue of material to production. Issue of material to production. Okay, and I am just writing in bracket the direct material and will explain why I am writing the direct material. Okay, so when you issue the material, that means you are giving the material out from you are giving the material to the production unit. Okay, so what will happen? There is the outflow of material. There is outflow of material, and when outflow of material is there, what will happen? The material control account will get credited. The material control account will get credited. Okay, so you know what's to credit. So we know that the material control account will get credited. We will write to material control account. Okay, now we have credited the material control account because there is outflow of material, but what to debit? Where it has gone, where your material has been gone. So your material has been gone into the work in progress account. Your material has gone into the work in progress account. So your work in progress accounts will get debited against the material control account because you have given your material from your material control account to the work in progress account. Okay, so the journal entry will be being material issued to production. Being material issued to production. Okay, so this is the case where you issue the your direct material to the production. So the journal entry will be work in progress account debited to material control account. Okay, now the third entry. Suppose you have received your material back from the production department. You have received your material back from the production department. Okay, so the entry will be just opposite of what we have done in above. The entry will be just opposite of what we have recorded above. So the transaction is return of material from production. The and transaction will recording of or return of material from production, that is the direct material. That is the direct material. So when you receive the material back from the production, what will happen? The entry will be just opposite of this entry. The entries will be just opposite of this entry. That means you are now getting the material back, so material control account will get debited. You are getting the material back, so material control account will get debited against the work in progress, against the work in progress. Okay, so you have received the material back. So journal entries or accounting entries, material control account gets debited to work in progress, and narration is being material returned back from work in progress. Simple. So till now we have studied three entries. First regarding the purchase of material, then second regarding the issue of direct material, and third regarding the return of direct material from the work in progress or from the production. Okay, so these are the three entries. Now we need to go for the next entries, which is issue of material to production. Sir, you are just writing the same line that we have studied earlier. No, beta. The issue of material to production. Earlier it was direct material. Now we are going to discuss what if there is a case of indirect material. What is the case if there is the case of indirect material, where the direct material is not directly going to be used, it is the indirect material which is going to be used in the production. Okay, so what is the entry here? We all know we are issuing the material, we are just issuing the material, so it is the outflow of material. That means your material is decreasing, there is a decrease in material, so you will do what? You will credit the material control account. You will credit the material control account. Okay, when you are crediting the material control accounts, so what you are going to debit? Because when we are issuing in the case of direct material, we are debiting the work in progress, but there is slight difference between recording the accounting in case of direct material and in case of indirect material. Okay, so when we issue material to in case of direct material, we debited work in progress, but when we issue the material in case of indirect material, we don't debit work in progress. First we debit what? The production overhead. So accounting entry will be production overhead accounts debited. Production overhead accounts debited. And narration will be being material issued to production overhead. Okay, and when we have issued material to production overhead, then material production overhead will issue the material to what? Work in progress. So this is it, the case where you issue material as a indirect material, then first it will go to production overhead, then production overhead will transfer it to the work in progress. So entry will be work in progress accounts debited to production overhead account. Okay, and the entry will be being indirect material observed as overhead. Okay, so this is the entry. So ultimately what happens? Your material control accounts gets credited and work in progress account get debited, but the route is different. First you issue your material to production overhead, then production overhead will issue your indirect material to the work in progress. Earlier in the case of direct material, there is very simple entry, work in progress will account debited and your material control account will get credited. But in case of indirect material, your your production overhead account will get debited and then your work in progress account will get debited and production overhead will get credited. Okay, so this is the different treatment in case of indirect material. Okay, now we need to study what if the indirect material is returned by the production overhead. Okay, so return of material from production overhead. That means in case of indirect material. So entries will be just reverse or opposite of what we have done above. So first entry that we have done above in case of issue of indirect material is production overhead account debited to material control account. Now the entry will be material control accounts get debited to production overhead, and the second entry will be just opposite of this. Work in progress account gets debited, now work in progress will get credited. So entry will be just opposite, which is production overhead accounts debited to work in progress account. Simple in the case of return of indirect material from the production overhead. Simple. So what we have studied, first entry that we have studied, it's the purchase of material. First entry that we have studied is the purchase of material. Second entry that we have studied is the issue of material. And third entry that we have studied is the issue of material, that is indirect material. And then we have studied about the return of direct material and then about the return of indirect material. Okay. So what we have done, we have issued, purchased the material, we have issued the material, we have even got the material written from the production. Now, if the production gets completed, if the production activity gets completed in the work in progress, so what will be the NT? Okay, so transaction is transferring completed units from work in progress to finished goods. So the entry will be finished goods account debited to work in progress. Okay, and this is the very simple entry when you transfer your work in progress to finished, because now your goods are completed, so it is termed as finished goods. So you debited the finished goods and credited the WIP, so that your material or the finished goods transferred to finished goods. Okay, now how to record the transfer of finished goods into the statement of profit or loss, because your goods are ultimately going to be sold in the statement of profit and loss. So it will be termed as the cost of goods sold. It will be termed as the cost of goods sold. So it will be the transaction of recognizing the finished goods as the cost of goods sold, as the costs of goods sold in the statement of profit or loss. Okay, those who have studied FA are know how it is going to be recorded. Okay, so now you need to record what? You need to record cost of goods sold. You need to record your finished goods as cost of goods sold in the statement of profit and loss. So the entry will be very simple. Your statement of profit or loss or profit and loss accounts will get debited to finished goods, through finished goods. So entry are very simple regarding the issue, purchase and everything about the material. Okay, so I'm just giving you 2 minutes. Please read all these entry from the notes. Please read all these entry from the notes. Then we are going to the our class notes, and then we will complete this topic today. Okay, so just wait and please read all these transaction. Okay, just read all these transaction from here. Okay, so I hope you understand all those entries in the material control account. Okay, now let's read this from the notes. Accounting entries for various transactions to be recorded in the material control account are as follows. For purchase, what will debited? The material control account will get debited because it is the increase in the material. And what will get credited? The bank or the payable account. If you have purchased through the cash basis, then bank account will get credited or the cash account will get credited. If you have purchased the material on the credit basis, then payable account will get credited. Simple. Then if you have issued your material for the production, that is the direct material, that means your material control account will get credited because you have issued the material. And what will get debited? The work in progress account. Simple. Now if you have received your material back from the production, if you have received your direct material back from the material from the production, then your material control account will get debited and your work in progress account will get credited. Simple, that we have already studied in the board notes. Then, if you have issued your material as a indirect material, if you have issued your material as a indirect material to the production, then your production overhead account will get first debited and your material control account will get credited. After having this, your indirect material will get offset in the work in progress. So then your work in progress account will get debited, a production account overhead account will get credited. That means your production overhead first will get debited and then will get credited. That means it will nullify and the entry will be, the net entry will be work in progress account debited to material control account. Okay, but there is just different types of treatment for direct material in case of indirect material. Okay, now if you get your material return from the production, that is the indirect material, the entry will be simple. Material control account will get debited to production overhead. Simple. Now the format for material control account is simple. Whatever entry that we have studied just here are just need to be placed on the material control account. Okay, so the format for the material control account is very simple. It is in the T-shaped account. Here it is the debit, here it is the credit. It is the T-shaped account. So this is the debit side, this is the credit side. Okay, now as we have already discussed, material is your asset and asset has a debit balance. That means your opening inventory will have a debit balance. So this is the opening balance of the inventory which will have a debit balance, which will have a debit balance. Okay. So when you purchase the material, so your material control account will get debited to bank or payable in case of credit purchase. So if you have purchased in cash, your bank will get debited. If you have purchased in credited, your payable account will get credited. Okay. Then if you have issued your material to the production, then work in progress account will get debited and material control account will get credited. If you have issued your material as an indirect material to the production overhead, then production overhead account will get debited and material control account will get what? Credited. Simple. And in the same way, if you have paid to your if you have paid to your supplier, then your supplier account will get debited and bank account will get credited. If you have just written your product to your supplier, then what you will get? You will get the amount received back in your bank. So your bank account will get debited in case of purchase return. If first time purchase in cash basis, so your bank account will get debited and your production overhead, your material control account will get credited. If you have return your goods but it was purchased on credit basis, then your payable account will get debited if there is a purchase return and purchase was in credit basis. Okay, and if you have returned back your goods from the WIP, then WIP will get credited and material control account will get debited, and in the same case of indirect material. So whatever the entry, I'm saying whatever the entry that we have studied in the board notes and in this notes are just need to be placed here and it will form your material control account. Okay, we will also revise material control account in the next class in detail. Okay, we will also revise the material control account in the next class before completing this chapter, so that we are able to solve all those types of questions which require the preparation of material control account. Okay, so this is the format of material control account. After completing this class, your homework is to read this material control account and in case of any doubt, please feel free to reach out to me on the WhatsApp. Okay, what is the process of asking the doubt? If your doubt is simple, then you can ask it on the group. If your doubts is little bit complex, you don't think that it is right to post it in the group, you can message me in the private chat. I will respond to your doubts. Okay, just give me 1 day, maximum give me 1 day. I will respond within 24 hours of your doubts. Okay, now comes to the important point. Differentiating direct material and indirect material is essential because they are accounting differently. Okay, that's why we are accounting issue of direct material, issue of indirect material differently, because they are accounting differently. As direct material directly accounted for work in progress, so direct material will directly go for work in progress, whereas indirect material will first transferred into production overhead, then it will subsequently offset into the work in progress. Ultimate destination of both direct material and indirect material is work in progress, but first indirect material is first transferred to production overhead, and then from production overhead it will transfer to work in progress. So the route is different, although the last destination of both material are same. Okay, now some more journal entries or accounting entries when completed unit are transferred from WIP to finished goods, that we have already discussed. Finished goods account debited to work in progress account, and when finished goods are required to be recognized as cost of goods sold, the cost of goods sold, that means the statement of profit or loss account debited to finished goods. Okay, so these are the entries that we have already discussed. Okay, so your task is to read the board notes. Sir, where is the board notes? Yes, it is available on your app. Okay, so in app you will have the board notes. In app you will also have these notes. In app you will also have the question bank. So your first task is to watch this lecture. When you watch this lecture, please keep your phone aside so that you don't get disturbed, because this is a technical subject. Okay, if you don't understand anything, you will get problem in the upcoming part of this chapter or upcoming chapters of this syllabus. Okay, so whenever you start watching the lecture, just keep your phone aside. Always have a key calculator on your desk with you, because when we require the calculation you are able to do it. Okay, so first watch the lecture, then go through these board notes, then go through these class notes, and then if you have any doubt, please ask your doubt on the same day itself, so that you will be able to understand each and every topic completely. Okay, so this is all for this class. We will see you in the next class. Till then, bye. Hello and welcome to another class of your ACCA Management Accounting. In the previous class, we have started with the very new chapter, which is chapter number 2, materials, where we have discussed that what is material, what is the process for the purchase of material. Then we have also seen the accounting entry for the purchase, issue and receipt of the material, where we have seen the how material control account is maintained and created, and how the journal entries or the accounting entries are made in the material control account. Okay, so these are the topics which we have studied earlier. Now in today's class we need to discuss about the topics which are such as inventory control and costing system. Then we need to discuss recording of inventory, then inventory control, and then inventory discrepancies, and the last topic, which is the valuation method of the inventories. Okay, so these are the topics that we need to discuss in today's class. Okay, so let's first revise the what we have studied in the previous class. So in the previous class we have studied about the meaning of the purchase of material, like what is material, and then how material are purchased, and the basic assumption that management accounting concern that entire process of purchasing, initiating, recording and paying the vendor are done through computerized system. So this is the basic assumption of the management accounting. Okay, then we have seen the process for purchase of material, that which department is responsible for which role and what is the control implemented there. Okay, then we have seen the accounting entry for the material. As we have already discussed, material are the inventories. Inventory is your current asset, and hence they are the asset, they have a debit balance. Hence opening balance of the material will always have a debit balance, and whenever you receive the material it will be debited in the material control account, and whenever you issue the material from your material control account, it will be credited in the material control account. Okay, your material control account will be credited. So this is the basic assumption that we have studied in the accounting entries for the material. Then we have discussed the material control account, that your opening balance will be shown in the debit side, and whenever you receive the material, when if you have purchased for the cash, then it will be entered on the debit side. If you have purchased on credit, then it will be debited on the material account debit side, but with the reference of to payable. Then in the same way, if we issue the material, it will go on the work in progress if the material issue of the material is for the direct material. If the issue for the material is it for indirect material, then it will go for the production overhead, and in the end you will have the closing balance on the credit side, which will implemented and comes on the debit side in the next accounting period. Okay, so this is the basics of material control account. Now in today's class, we need to start with the new topic, which is inventory control system and costing system. Okay, so let's start reading what is inventory control system. This is the very basic and easy topic. Okay, so inventory control is managing the quantity of each item. What is inventory control? Inventory control is managing the quantity of each item and knowing where it is Suppose in the real life, if you have purchased the material, okay, in real life if you have purchased the material, so first the material will be with vendor, okay, from whom you have purchased. Then vendor will ship it to you. So when he ship the material to you, where is material at that time? The material will be in the shipment. Then after shipping the material, who will receive the material? The material will be received by the store or the warehouse or any other department, such as goods receiving inwards department. Okay, so it will be received by store and warehouse. Then it will be issued to the department to who they have actually ordered the material. Okay, the department which have all first ordered the material will be transferred to them by the store. Okay, then it will be handed over to department. Then department will hand it over to the work in progress. Okay, and from work in progress it will go on the finished goods. Okay, so this is the just brief example of the journey of the material. Now what is inventory control system? The inventory control system is knowing where your material actually is. Knowing where your material actually is. When you order the material, so you know the material currently is lies with vendor. Then when vendor shipped your material, you know that it is in the shipment. Then after shipment, what will happen? The store or warehouse will receive the material. So you know that your material is with your store or the warehouse. Then when warehouse or the store will transfer the material to the your concerned department, it will be with the department, and you will know when department will issue it to the WIP, and you will also know when WIP issued it to the finished goods. So at any point of time, the management knows where their material is. At any point of time, the management will know where your material actually is. Then how they are going to know? Let's start with the basic example. When you order anything from Flipkart or from Amazon, you know where is your ordered item, because every time the item moves from one place to another, you will get the notification or your status updated on the order side. You know that the order has been placed. You also know when the order has been shipped from the vendor. You also know when the order is with the warehouse. You also know when your order has reached your city. Then you will also know whether your order has been out for delivery or not. And when you get the order, you will receive the message that the product has been or the order has been delivered. So every time you know where your actual product is. In the same way, the companies or the management also knows that where their material is, because nowadays there are systems like QR code, mobile tracking, barcode system. There they know that at which stage their material actually is. So this is all about inventory control system, which is managing the quantity of each item and knowing where it is. Okay, there may be cases that where your some part of the material lies with your store, some part of the material lies with the department, or some part of the store of the material will lies with the WIP. Okay, so there may be the cases. So you also know that how much quantity of an item are with store, or how much of quantity of an item are with department, and how much of the quantity of item are with your WIP. Okay, so you actually know the quantity and the place where your material is. This is all about the inventory control system. Okay, it also involves recording inventory received and issued and identifying any damage or obsolescence. Okay, so every time you receive the material or issue the material, you will also know whether your material has been damaged or become obsolete, because every time your material passes through the system also checks that it is in the proper condition or not. It will remove the item which are not in the fit condition or in the proper condition. So you will also know that how much of the damage are there in your material, or how much of the material has become obsolete. Okay, so this is also been known by through inventory control system. Now, from where they will get the data. So data from inventory control system is usually the part of the management information system. So whatever the data the inventory control system is going to produce or generate, it will become the part of what? A management information system, which includes the costing system. Okay, so it will also include the costing system, because every time you receive or issue the material, then the cost of that receive and issue of material will become the part of the costing system also. Okay, now modern data captures methods such as barcode scanners, QR code provide cost accountant with the real-time inventory information. It provides the cost account with the real-time accounting information. Now, what is modern data capture method? What is modern data capture method? Like suppose this calculator passes through the warehouse of the company, then reaches to the retail store. Okay, so what happened? The machine at the warehouse will scan it, then the retail store will scan it. So you'll know that whether your calculator is with the warehouse or with the retail store. So these methods are such as barcode scanners or the QR code, which provide cost accountant. Who are cost accountant? If you are studying the management accountant, or if you go on the field of management accounting, you will known as cost accountant. Okay, so it provides the information with the cost accountant with real-time inventory information. Now, what is real-time inventory information? The minute the transaction or the issue or the receipt took place, on the same minute, on the same second, you also get the information. This is real-time inventory information. Like if you transfer money from your phone to another person, so you will get the notification at the real time that you make the transaction, and that other person will also receive the notification on the same time. That means it is the real time exchange of information. Okay, earlier what used to happen? You make a check, then check will be deposited by the third person in his bank, then check will get cleared, then after clearing the check you will go to the bank and then give your passbook to the bank staff, then they will make entries on that passbook. So that was not real time. Okay, there was the difference in the actual transaction and the getting the information of the transaction. But nowadays, due to modern data approaches and modern capture methods, you will get the real-time inventory information. Okay, so the minute your material left your store or the material left your department, you will get the information about it. Okay, and same will in the case of receipt of material. So what is inventory control system and costing system? That knowing the quantity and the place where your actual material is. Okay, so this is all about inventory control system and costing system. Okay, I am giving you 2 minutes to read this, then we will go for the next topic. Okay, so I hope you are done reading with the inventory control system and costing system. Okay, now comes to the next topic, which is recording of inventory. Okay, so what is recording of inventory? The inventory receipt and issue for each material will be recorded in the relevant material control account within the computer accounting system. This is very simple topic. What it is saying? It is saying that the inventory receipt and issue of each material will be recorded in the relevant material control account. There may be material A, there may be material B, there may be material C. So material A, B and C will have different material control account. What I am saying, suppose if I am manufacturing the product, if I am manufacturing the product X, okay, but in order to manufacture the product X, I need material, I need certain materials, okay, and materials are A, B and C. There are three types of material which is used to manufacture the final product, which is product X. Okay, now when I have material A, when I have material B and when I have material C, then I will need different types of material control account in order to record that particular material in that particular account. So I will have A's material control account, I will have B's material control account, I will also have C's material control account. Okay, so I will have different types of material control account for different types of material, and it will record all the receipt, it will record all the receipts and issue of each of the material. It will record each of the issue and receipt of the material in their respective material control account. Got it? So this is inventory recording. Okay, every time an entry is made in the material control account, detailed information in respect of inventory valuation is also simultaneously recorded. What is simultaneously? Together. Like one transaction took place, another transaction of the same effect will recorded on the valuation side. Okay. Now, if you have the material A, like if you have the material A of 100 kgs of quantity of rupees or of dollar 10 each. So the value of the material is 100 multiplies by $10, that is $1,000. Okay, so this is the material that you have. Now suppose you have issued 50 kgs of the material. If you have issued 50 kgs of the material of the same value, that is 10 kgs. Okay, so you know that the minute you have issued 50 kgs of the material from 100 kgs, you are left with 50 kg of the material A, but at the same time your valuation will also be dropped, like $500 will be reduced from the $1,000 and you will left with $500 of value of material. Okay, so the valuation and issue and receipt will took place simultaneously in the books of management accounting. Okay, so this is the meaning of same effect. Okay, so what is recording of inventory? The inventory receipt and issue for each material will be recorded in the relevant material control account within the computer accounting system. So it is the computer accounting system, you don't have to put entries manually. So the minute you put any particular entry, the effect of the same will go on the valuation side. Okay, every time an entry is made on the material control account, detailed information in respect of inventory valuation is simultaneously recorded. Got it? Simple. Okay. So these are the topic which is just about reading. Okay. These are very simple topics. Okay. But are there in your course? So I have to tell you that. Now comes another topic which is inventory control. Now comes another topic which is inventory control. Okay, so stock taking. What is the word stock taking? You are not taking the stock, you are just counting the stock. What is stock taking? Stock taking is not taking the stock, it is just counting the stock. So stock taking. Stock taking is one of the ways in which organization checks the inventory. When I talk about organization, organization means any business, any company, any person. Okay, so stock taking is one of the ways by which organization check their inventory. Okay, it's like going to the godown and then counting all your inventory by your own hand or by through any electronic devices. Okay, it involves physically counting the material held and checking the figures against the recording records detailing the quantity of material the organization should have. What is stock taking? It involves physical counting the material held and checking, and then checking. First you are going to count the inventory that you have in your organization, then checking the figures against the records detailing the quantity of the material. Now what this means? Suppose if you are managing your books of account, if you are managing your books of account, okay, and as per the books you get to know that you have material A of the 50 kgs quantity, okay, and the value of the same is $500. Okay, so this is as per the book, this is as per the book. But when you go for the stock taking, when you go for the stock taking which involves physical counting of the inventory, which involves physical counting of the material of inventory, which involves physical counting of material. So when you physically have counted, you get to know that there are only 45 kgs of material A in your godown. There is only 45 kgs of material A in your godown. Then you get to know that as per book there are 50 kgs of material, but as per the stock taking and physical counting there is only 45 kgs of material. Now you know what is the difference. Now you need to find out what is the difference. You need to investigate the difference. This is stock taking, where you physically count the stock and then match it with the books or the record which you maintain in your organization. Okay, now comes to the notes. What is stock taking? Stock taking is the one of the way in which organization check the inventory. Okay, now it involves physically counting the material held and checking the figures against records detailing. That means records are telling you the details of the quantity of material the organization should have. So this is about stock taking, where you first go for the physical count, then you check it with your details, okay, of the records. Okay, so this is all about inventory control. Okay, now there are two methods for stock taking. There are two methods for the stock taking, like how we are going to take stock. First one is periodic. First one is periodic. As the word suggests, this is periodic, where you count your stock once in a year. Where you count your stock once in a year. Suppose if at the end of the year, this is my practice to go and physically count entire stock from the go down, then this is periodic stock taking, where I don't count the stock on the monthly basis or on the weekly basis or on the daily basis. I just go on the any particular day in the year to count the stock. This is periodic, where I close my shop, I close my factory, I close my operation just to count the stock. Because if I don't close my operation, then what will happen? I am counting the material and someone will come and took the material and go procure in the work in progress. Then how I am able to count it? Or suppose if I am counting the material, the store department has sent the material in the go down. Now how I am going to count the material? Because every time there is issue and receipt or movement of the material. So when we do periodic stock taking, we need to close off the operation so that the stock or the material will lie on the go down without the movement, so that I am going to count it. Okay, so this is periodic stock taking. Then comes the second method of stock taking, which is continuous, now as the word again suggests, which is continuous, that means it is non-stoppable activity. It will took place anytime every day at the organization, where you continuously count your or value your quantity of the stock through records. Because every time you make the entry for the issue and the receipt of the material, the accounting will tell you how much of the stock is left with you. So in periodic you need to close off all your operation, and it is hectic, whereas in the continuous form system you don't need to close off your operation. You can any point of time know what is the situation of the material, how much of the quantity of the material are there with you. Okay, so there are two methods for stock taking: periodic and continuous. In in subject of FA in chapter number 8, which is the IAS 2 inventory, we have discussed about this topic in detail, where we have discussed what is periodic, what is continuous method of stock taking, as both methods are discussed in the detail in chapter number 8 of the FA. FA means financial accounting. Okay, so this is the topic has been discussed in detail in there. In your MA, it is not discussed in such detail, hence we are just moving ahead by telling you the basic of the periodic and continuous stock taking approach and methods. Okay, so now, as we have discussed what is inventory control system, we have discussed what is recording of inventory, and we have discussed what is inventory control and stock taking. Now the another point is inventory discrepancies. The second topic is inventory discrepancies, where what is inventory discrepancies? It is the difference between the inventory record and monitoring the inventory. A physical stock take are known as discrepancies. Okay, now in the suppose in this case, you know that as per book there is 50 kgs of material A, and as per the physical count there is 45 kgs of material A. That means that 5 kg difference, that 5 kg difference of material A is what? It is the inventory discrepancies. Okay, it is the inventory discrepancies. So this is the difference between the inventory records as means as per book. It is the difference between inventory record as per books and monitoring the inventory, that is a physical stock. So it is the difference between book and physical stock, which is known as inventory discrepancies. Okay, now our organization must ensure that it has adequate control to place to minimize difference between physical inventory count and inventory record. Okay, so every organization must have control in place to prevent such differences, and such differences should also be investigated. If even after placing such controls, if there is such difference, then means you need to investigate whether your staff or your employee are actually stealing the material, or whether is there any other cause or the reason for such difference. Okay, so first the organization should have control in order to prevent such differences, and even if there are such differences, then it should be investigated by the organization. Okay, now there are many reasons for such differences, and ways to control or prevent them. Okay, so there are many reasons, and every reason has some control in order to prevent such differences. Okay, now let's see what are the reasons and what are the control. Okay, so the first reason, which is the quantity of goods delivered. The quantity of goods delivered differs from what is shown on the delivery note. Suppose you have received the material from your vendor. You have received the material from your vendor. But whatever the delivery note is showing, now what is the delivery note? It is the document provided by the vendor. It is the document provided by the vendor that these are the list of goods which we are sending to you and which is we are delivering to you. So you must check whether the items of goods described on the delivery note is matching with the actual delivery made by that vendor. Okay, so the reason is the quantity of goods delivered differs from what is shown on the delivery note. Now in order to counter this, what is the control? The control is all inventory should be counted as it is received and signed off. So what is the control? That every time you receive the delivery of goods, every time you receive the delivery of material or the goods, before accepting the delivery, what you should do, you should count, you should physically count and check that whatever the quantity and the description of the goods are shown in the delivery note are actually matching with the actual delivery of the goods or not. Okay, so you know the issue. What is the issue? The issue is there may be difference between the delivery note and the actual delivery of the goods. Now what is the control? The control is that every time you receive the delivery of the goods, you need to physically check, count and verify whether the same goods has been delivered which are showing in the delivery note or not. Okay, so this is the first reason and the first control. Okay, now comes to the second reason. The actual quantity of inventory issued. the actual quantity of the inventory issued to production differs from what is shown in the record. Now you are not receiving the goods. Now you are not receiving the goods or the material. You are issuing the material to the production. You are issuing the material to the production, that now you have the material, now you are giving it to the production to please manufacture this material, you please use your material in order to manufacture anything. Okay, now the question is that whatever you have issued is differs from the records, it differing from the records, that record shows something else and what you have sent it to the production is different. Okay, so you know what is the problem here. Now in order to prevent this, what is the control system? So the control is inventory issued to production. What is inventory issued to production should be maybe not, it is should be, it is should be carefully counted and signed off. So before issuing any material to the production, before issuing any material to the production, what you need to do, you need to physically count it, then only sign it, that the same item has been issued to material which are showing in the record or not. Okay, so now you know the control, that before issuing the material to the production, you need to physically count and sign it off. And in the same way, before receiving the delivery of the material, you need to physically count and check whether the same item has been received or the same material has been received, which is shown in the delivery note. Okay, so there are two problems and you have two controls for each of the problem. Got it? Now comes to the third problem, which is production returned excess inventory. Production returned excess inventory. Now that production is returning you the inventory because they have excess in their quantity, so they are returning it to you. So the production returned excess inventory without any record being made in the system. Okay, so there are no such record for that excess return, but they have made it to you. So now you know the problem, that in the record there is no such discussion or no such information written regarding the that excess written by the production. Okay, so what is the control here? Now let's see. All movement of material, all movement means receipt and issue both. Okay, movement does not only means issue or receipt, it means both issue and as well as receipt. So all movement of inventory should be recorded. All movement of inventory should be recorded. So as you record the issue of the material to the production, then in the case of return you also need to record the receipt of material in case of return by the production. Okay, so this is the control, that every movement needs to be recorded. Okay, so this is the third control of the third problem. Now comes the fourth problem, the theft of inventory by the employee. Now what will you do if the material has been theft or stolen by your employee? Okay, so this is the problem. There in many cases the employee may be indulged in such activities where they stole your material. So what is the control here? The control is security mechanism and regular inventory checks will prevent this. What will prevent this? Security mechanism and regulatory inventory check will prevent this. Like in the malls, if you go on the shopping mall and if you see the cloth will have that particular electronic tag in it. You can try the cloth without even removing that. But if you try to get that cloth out of the shopping mall without making the bill or without paying for it, what will happen? The control system, the security system will beep. That beep because that cloth will have that electronic mechanism installed on it. So when you do or when you go for the billing, what will happen? The cashier will take that uh, electronic device out of the cloth so that it is now considered that you have paid for this. Okay, so this is what? This is security mechanism and regulatory inventory checks. Like in regular terms, you can either on the end of the day or on the end of the week, what do? You can go and just count on the stock so that you know whether your stock has been any difference with the inventory records or not. Okay, so this is me. By this way you can prevent the theft or the storing of inventory by the employee. Okay, so this is the fourth problem and the fourth control for that particular problem. Now comes to the last but not the least problem, which is inventory is damaged or obsolete and thrown away without any record being made in the system. Now what is the case here? Suppose I am having the material of or the inventory of this calculator. Okay, but some of the calculator has been damaged. So what will happen? It is of no use of mine. So I will just throw it out. I will just throw it out. So if I just throw it out, what will happen? The record, the books will still show that I have that particular amount of calculators, but in actual there is less quantity of calculator because I have just thrown this damaged calculator out of my inventory. So this is the problem where your records will not match with your actual inventory because of such damage or obsolete of the material. So what is the control here? The control is that every damage or obsolete item should be recorded. So even if there are damage or the obsoletes of the material, then it will also need to be recorded in the books of accounts so that your material matches with the record of your books. Okay, so these are the reasons and the base or methods to control them. Okay, so these are the inventory discrepancies. Okay, now, so we have discussed this topic also. Now the last topic for the day and for the chapter is inventory valuation method. But before going for this topic, I will request you to just give 5 minutes to read all this topic that we have studied today, so in order to you will able to understand the upcoming topic. Okay, so just take 5 minutes, read this slowly, and then we will come again and will complete the last topic for the chapter. Okay. Okay, so I have done your reading the topics. Okay, now comes to the next topic for the today's class, which is inventory valuation method, which is inventory valuation methods. Okay, so first we need to discuss why there is need for inventory valuation method. Okay, so first we will discuss why there is need for inventory valuation method, like how and what is the problem here. Suppose you have certain amount of a certain amount of transaction of the each material where you purchase material throughout the accounting year at different prices. Okay, so there may be different days and different prices at which you have purchased the material. Okay, so the first column is the date of purchase of the material. Then you have the second column, which is receipt of the material. In receipt you will have three different columns. Okay, so in particular receipt column you have three different columns. First one is quantity, second one is price per unit, and third one is the value is actually quantity multiplied by price. Got it? Then you have issue, that how much of the quantity of the material that you have issued, which is again the same quantity, price, and value, which is quantity multiplied by price. And at the end you will have the balance of the material, which is again quantity, price, and value. Got it? Now understand what is the problem here. Suppose on 1st of January you have purchased certain quantity of the material. Okay, so what will happen if you have purchased the material? You actually receive the material. So this is the receipt of material. Suppose you have purchased 100 kgs of quantity of material, which is 10 kgs, which is $10 per kgs. Okay, so total value will become $1,000. Total value will become $1,000. Okay, now there is no such issue, so you will left with the balance, which is 100, 10, and 1,000. Okay, now again on 5th of January you actually issues the material to the production. Okay, so there is no such receipt, you actually issue. So you have issued 50 kgs of material at the rate of 10 per dollar, so it is $500. So now you are left with how much of the material? Because earlier you have 100 kgs, now you have issued 50 kgs, so you are left with 50 kgs of material at the rate of $10 per kgs, which is $500. Till now this is all simple and quiet. Okay, now on 7th of January you have again purchased the material, which is 150 kgs at the rate of $12 per kg, at the rate of $12 per kg. Earlier when you have purchased the material, it is of $10 per kg. Earlier it was of $10 per kg, but now when you have purchased on the 7th of January, it has increased to $12 per kg. So what is the value here? Please use your calculator. 150 multiplied by 12. The value of the purchase is $1,800. Okay, the value of the purchase is $1,800. Now if you have not issued anything on that particular date, at the end of the day you are left with 50 kgs of material, which is of $10 per kg, which is valuing $500. And you also have 150 kgs of material which values $12 per kg, and the total value of the same is 150 multiplied by 12, which is $1,800. So at this point you have two types of material in your organization. At this date you have two types of material in your organization. First one is which is valuing $10 per kg, and second one is which was purchased for $12 per kg. One was purchased for $10 per kg, second was purchased for $12 per kg, and there is no such control for the increase in cost, because as the day progresses the cost will increase or decrease as per the market condition. Okay, so what will happen on that 7th of January? You have two types of material. First one is $10 per kg, second one is $12 per kg. Got it? Now comes the twist. Now comes the twist or the problem. On 10th of January, on 10th of January, you need to issue the material, to the production. Okay, how much? Suppose 80 kgs. How much? Suppose 80 kgs. Now the question and the problem is, what material you will issue? What material will you issue? Will you issue 50 kgs from that lot and the remaining 30 kgs from 150 kgs of lot, or you will issue entire 80 kgs from 150 kgs of lot? So what will you do? Because now question is, what material will you issue? Because if you issue 80 kgs from 50 kgs, then you don't have 80 kgs at a rate of $10 per kg. So what will happen? You need to issue 50 kgs at a rate of 10, and then you need to issue 30 kgs at a rate of 12. Okay, so this is the first option that you can use. Okay, then the second option is that you skip the 50 kg quantity and directly issued 80 kg from this 150 kgs at the rate of 12 per dollar. So there are two cases. First, either you can issue in such a way that you end up using the earlier lot, then use remaining from the fresh lot, or you can just take from the fresh lot. So this is the problem here. Hence, the need for inventory valuation method occurs. Where we need to study, there are four types of method. For this inventory valuation. First one is the FIFO. FIFO means first in, first out. First one, first out. So the first method is FIFO, first in, first out. That means whatever you have purchased earlier, will go first to the production. This is FIFO. Suppose in this case, if I use FIFO, so then what will happen? Because I am using FIFO, first in will go first out. Okay, so what I have purchased first, I have purchased this 50 kgs first, so it will go first. So if I am using FIFO, then I will issue 50 kgs at a rate of $10 per kgs, that is $500. Then remaining quantity will be issued from the next lot. So as 50 kg has been fully issued, then what is remaining? The 150 kgs. Then I will issue 30 kgs from that 150 kgs of lot at a rate of $12 per kgs, which is 30 multiplied by 12, which is 360. So what will left with me? The only quantity left is 150 minus 30. 150 minus 30, which is 120 kgs, that is 150 minus 30 at a rate of 12, which will comes to the quantity of $1440 value. Okay, so this is FIFO, first in, first out. Okay, so the first method that we have studied about inventory valuation method is FIFO, where you will issue the material which you have purchased earlier, or the first, then it is termed as FIFO. Okay, so what is FIFO? FIFO assumes that the item of inventories, which were purchased or produced first, are consumed or sold first. So which will you receive first will go first for the issue or the sales. Okay, and consequently the remaining in the inventory at the end of the period are those most recently purchased or produced. As you are going to follow FIFO, that every item which you have purchased earlier will be issued first. So at the end of the accounting period, you will left with the inventory which you have purchased just recently, because whatever you have purchased earlier were just issued to the production. Okay, so what FIFO is saying? FIFO is saying that whatever you purchased or produced first will utilize or going to be sold first. This is the concept of FIFO. Got it? Okay. Now comes to the second method. Which is LIFO, last in, first out. So this is the just opposite of FIFO. In FIFO, what will happen? Whatever you purchase first will go first for the sale or the issue. In LIFO, that situation is just opposite of the FIFO. It is last in first out. It is last in first out. So whatever you have purchased just recently, whatever you have purchased just recently will be issued first. Will be issued first. This is LIFO. Okay. So if I have followed LIFO here, if I have followed LIFO here, then what will happen? That whatever I have purchased first, whatever I have purchased the last of the order will be issued first. So whatever I have purchased on the last 150 kgs, okay, because that 50 kgs was purchased earlier and I am following LIFO last in first out. So what was last in? It is 150 kgs. So I will issue it. So 80 kgs will be issued from that 150 kgs at the rate of $12 per kgs. So the actual amount will be 80 multiplied by 12, which is 960, and I will be left with what? I will be left with 50 kgs of $10 per kgs value of material, which is 500, and then 70 kgs of material which values $12 per kgs, which is 70 multiplied by 12, 840. So this is LIFO. LIFO is last in first out. Whatever you purchase on the last will be issued first to the production. Okay, this is LIFO. So what we have discussed? We have discussed two methods. First one is FIFO, second one is LIFO. Okay, now comes and see what LIFO is saying about its method. LIFO assumes that the items of inventory which were purchased or produced last, which was purchased or produced last, are going to be consumed or sold first, are going to be consumed or sold first, and consequently items remaining in the inventory at the end of the period are those which were purchased or produced first. So if you are going to issue everything which you have purchased just now, if you are going to issue everything which you have purchased just now, which is last in first out, so at the end of the accounting period you will be left with the item which was you have purchased on the first go, which you have purchased on the first leave or the earliest. Okay, so you are only left with the item which you have purchased or produced first, because whatever you have purchased or produced recently or latest will be issued to the production or will be sold to the market. Okay, so this is LIFO. First FIFO is first in first out, LIFO is last in first out. Got it? So these are the two methods that we have discussed. Got it? Now comes to the third method, which is cumulated weighted average pricing, which is cumulated weighting weighted average pricing, which is also known as CWA in short, cumulative weighted average pricing. Okay, now let's see what this cumulative weighted average pricing means. CWA calculates the average cost per unit. It calculates average cost per unit every time a new material received occurs by dividing the total cost of the held inventory by the total number of the unit in stock. You understand anything? No. Let's again read what it is saying. It is saying that CWA calculates average cost per unit every time. Every time means every time it will have a fresh calculation in which they have a new material is received. Every time a new material is received or occurs by dividing the total cost of the held inventory by the total number of the unit in the stock. Okay, so this is what? This is TWA, cumulated weighted average pricing method. Okay, now let's understand this by the example. Okay, so let's understand what is CWA method. First you will have date, then you will have receipt column, then you will have issue column, then you will have at the end the balance column. Okay, now understand, on 1st of January you have received the material. Okay, so there are sub three columns between each receipt, issue and balance. Sub three columns are quantity, price, value, quantity, price, value, quantity, price and value. Okay, now you have received the inventory. So suppose if you have received 100 kgs of inventory of $10 per kg, so you will have $1,000 of value of inventory, and you have not issued anything, so the balance is 110 per kgs and 1000 total value of dollar of inventory. Okay, now on 3rd of January you have again received the on 3rd of January you have again received the inventory. Okay, now which is $150 of 150 kgs of inventory of $12 each, which is 150 multiplied by 12, which comes to 1800, which comes to 1800. Okay, now again you have not issued anything, so now we need to calculate what is the per unit price. Now we need to calculate what is the per unit price. Okay, so this is what method, this is cumulated weighted average pricing method. Okay, and the formula is very simple, it is given in your notes. It occurs by, from here, by dividing the total cost of held inventory by the total number of unit in the stock. It is calculated by dividing total cost of the held inventory by the total number of unit in the stock. Okay, so now see how it is going to be calculated. First, you will have 100 kgs of inventory which you have purchased at a rate of $10 per kgs, and in the new lot you have purchased 150 kgs of inventory at a rate of $12 per kgs. Okay, so now how much kgs of inventory do you have? Now how much kgs of inventory do you have? First you have purchased 100 kgs, then you have purchased 150. So 100 plus 150 is what? This is 250 kgs. This is 250 kgs of quantity of material. Okay, now what is the cost? What is the cost? Earlier lot of quantity is of $1000, is of $1000, and the second purchase of lot is $1800. So $1000 plus $1800 is $2800, is $2800. So how you are going to calculate the price? The price will be calculated by dividing 2800 by 250. The price will be calculated by dividing 2800 by 250. The total cost by the total unit after every receipt. So 2800 divided by 250, please use your calculator, is 11.2 dollar, is 11.2 dollar. Got it? Now suppose on 5th of January you are not actually receiving the inventory, you are issuing the inventory. So there is no such receipt, you are going to issue the inventory. So suppose if you need to issue 80 kgs of inventory, you need to issue 80 kgs of inventory. So at what price you are going to issue it? At what price are you going to issue it? So you are just going to issue it on the latest price which you have calculated, on the latest price which you have calculated, which is the cumulated weighted average price, which is the cumulated weighted average price, because you have just what made, you have just cumulated the and averaged the price based on previous purchase and the fresh purchase. So you will issue 80 kgs of material at the rate of $11.2 per kg, which will turn around to be 80 multiplied by 11.2, which is $896, which is $896. So at the end of the issue, at the end of the day of the issue, what will be left? You will left with inventory which is 250 minus 80 kgs, which will turn around 170 kgs at the rate of $11.2 per kgs, at the rate of $11.2 per kg. So the total value we will have is $1904. Okay, so this is cumulated weighted average pricing method. Okay, now let's see another entity so that you will be able to understand this more clearly. Okay, now suppose on 7th of January, you have again purchased or received the inventory. You have again purchased and received the inventory. Suppose now you have received 50 kgs of inventory. Now you have received 50 kgs of inventory. Okay, so the quantity is less and the price has been increased. You are not provided with the discount. There is many assumption in the market. Okay, so suppose you have purchased 50 kgs of inventory at the rate of 15 kgs per dollar. So what is the value? 50 multiplied by 15, that is 750, which is $750. 50. Now on the date of issue, on the date of receipt, we have not issued anything, so there is nil in the column of issue. So now what you are left with? You are left with 170 kgs of earlier lot and 50 kgs of new lot of the purchase of material. So 170 plus 50 is what? 170 plus 50 is $220. How I have calculated it? Just simple, add both the quantity, 170 plus 50. Okay, now what is the value of the inventory that you have? 1804 plus 750. 1804 and 750. So 1804 plus 750 will turn around to be 2554. Will turn around to be 2554. Okay, now comes to the calculation of price. So what is the price? The price will be 2554 divided by 220. So it will be divided by 220, which will give you again the value of $11.61. Now you are provided with the value of $11.61. Okay, so this is your new average price. This is your new average price after each receipt. After each receipt, so every time there is new receipt of the material, you need to calculate the new cumulative weighted average price. You need to calculate the new cumulative weighted average price. Okay, so this is your new price. So now suppose on 10th of January you are not actually receiving the goods, you are issuing the goods. So suppose if you are issuing 100 kgs, so it will be issued at a rate of 11.61. It will be issued at the rate of 11.61. So 11.61 multiplied by 100 will be 1161, and you are left with what? You are left with 110 kgs. That is 210 minus 100. You are left with 120 kgs. Sorry, you are left with 120 kgs at the rate of 11.61. So 11.61 multiplied by 120 is 139.3.2. Okay, so this is how cumulative weighted average pricing method works. Got it? Okay. Now, before going for the last method, I am just giving you 3 to 4 minutes to read this, because this is the one of the best method. Okay, and there is some typical form of calculation which student find difficult after reading first time. Okay, so just take 3 2 minutes, understand what has happened here, then we will go for the next method. Okay, so let's start with the FIFO and LIFO, then you will go for the cumulative weighted average. Okay, so first read what is FIFO LIFO, then please go for the cumulative weighted average. Okay, so I hope you are done reading with the this illustration. Okay, now comes to the notes again. Read about what is cumulative weighted average pricing. Then we go for the last method. Okay, so what is CWA? CWA calculates the average cost per unit every time a new material received occur by dividing the total cost of held inventory by the total number of unit in the stock. Okay, so this is cumulative weightage average pricing. Okay, got it. Now comes to the last method of the inventory valuation, which is periodic weighted average pricing, which is PWA in short. Okay, now see what this all about. PWA calculates a single weighted average cost per unit at the end of each accounting period rather than whenever inventory is purchased or issued. The single weighted average pricing is used to value all the issue to production and the closing inventory for the period. So what is periodic weighted average pricing method? It calculates a single weighted average cost per unit at the end of each accounting period rather than whenever inventory is purchased. This single weighted average price is used to value all the issue to production and closing inventory for the period. Now let's understand what is all about. Okay. Now suppose in PWA, okay, what is the case? Suppose on the 1st of January you have received in the 1st of January you have received 100 kgs of material at a rate of $10 per kg, so the value is $1000. Okay, now on the 3rd of January you have issued 50 kgs of inventory. Okay, so it will not talk about how much of the material was there. Okay, it has just issued. Then again on 5th of January you have purchased 150 kgs of material, okay, at a rate of 12 per kg. So this is $1800. So what is balance here? The balance here is 100 kgs. The balance here is 50 kgs. The balance here is again 100 minus 50, 50, 50 plus 150, 200 kgs. Okay. Then on 7th of January, you have again purchased $200 of 200 kgs of inventory at a rate of $15. So 200 multiplied by 15 is 3000. So you are left with 200 plus 200, which is 400 kgs. Then on 10th of January, you have issued some unit, which is 150 kgs. So 400 minus 150 kgs, you are left with 250 kgs. So this is what you are left with. Now we need to calculate price as per PWA. So this is very simple. Just add whatever you have purchased at what price you have purchased. Okay. So we have purchased how much of the quantity? So we have purchased 100 plus 150 plus 200, which is 100 plus 150 plus 200. It is 450 kgs. And how much of the value it is? 1000, 1800 and 3000. So 1000 plus 1800 plus 3000 is 5800. So pricing will be 5800. The pricing will be 5800 divided by 450, which is going to be $12.88 per kg. Simple. Simple. Okay, so this is PWA, periodic weighted average method. Now you will ask, sir, what is the value of closing inventory? You will ask, sir, what is the value of closing inventory? Because in earlier method we can anytime tell you that this is the value of closing inventory, 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 this is the value of closing inventory. You are able to tell me in the FIFO, LIFO, cumulative weighted average price method. Sir, how can we know that what is the value of closing inventory in PWA? Very simple. You have the value of closing inventory right in front of you. Value of closing inventory or the value of closing material, which is how much of the closing material you have at the end of the accounting period. How much of the closing inventory you have at the end of the accounting period. It is 250 kgs. So we will write 250 kgs. And what is the average PWA? This is $12.88. So $12.88. So the value is 250 kgs multiplied by $12.88, which is $3,220, which is $3,220. Simple. So this is all about periodic weighted average pricing method. Okay. So in different types of valuation method of the inventory, what we have studied? We have studied FIFO, we have studied LIFO, we have seen CWA, we have seen PWA. Okay. So this is all about the different types of calculating the value of inventories. Okay. Just start reading this. Then this is all about the last topic for the chapter. So organization may frequently buy the same item. The same item they buy frequently, okay? And but pay varying or different prices at different times. Where there may be changes in the price, okay? Earlier their item used to be cheap, earlier their item used to be expensive, so there is change in the pricing, okay? But every time you purchase it, there is certain amount of change in the price. So in order to eliminate this, what will given to you are provided with the different types of inventory valuation method. Okay, so therefore the order for inventory need to be established. The order of inventory needs to be established to determine the value of inventory. What order? The order which is FIFO, LIFO, CW or PW. This is the order how we are going to issue the inventory. Okay, so there are four different methods: FIFO, LIFO, CW and PWA provided to you. FIFO is first in first out, LIFO is last in first out, CW is cumulative weighted average pricing, and PWA is periodic weighted average pricing. Very simple. Okay, now let's see. This is the chart which is provided on your ACC study hub. So all credit goes to ACC study hub for this table and chart, where you are provided with the information that if it is the case of FIFO, the goods sold are the oldest first. So this is FIFO, first in first out. So whatever goods you are going to sold, it is the oldest one because it is first in and first out. Okay, and the closing inventory will be valued at latest prices because whatever you have purchased earlier is just sold out. So whatever left with the latest purchase, and it will have the latest price. Okay, now in the LIFO you will be provided with the goods sold which is newest first, because this is LIFO, last in first out. So whatever you have just purchased will be issued first. So this is newest first. Okay, and the closing inventory will be valued at oldest price because this is LIFO. So whatever you have purchased earlier has not yet to be issued, because whatever you have issued are the recent purchases. So whatever you purchased first are still in your go down or in your stock. So your closing inventory will be valued at oldest price. Got it? Now in CWA, the frequency of price calculation, that when you are going to calculate the price in CWA, you need to calculate the price every time. You need to calculate the price every time upon receipt of new material. Every time on receipt of new material. So in the CWA, you need to calculate the price every time whenever you receive the new material. Okay, and the price of issued material. And what will be the price of issued material? That you have calculated just above. So at the latest calculated weighted average price. So whatever you calculate on the CWA method, every time you receive the material will be the same price at which you are going to issue the material. So this is the latest calculated weighted price, which is just you have calculated above. Okay, now in PWA the frequency of price calculation is just one at the end of the period. So only at the end of the period you are going to calculate the PW price, and none in not and every time you are going to receive the amount. So this is different from CWA. The price of the issued material will be at the average price for the period. So whatever there is the average price, you will consider that at the same price you have issued your material. Got it? Like in this case, this case, if I ask you that 50 kgs and 150 kgs, which is the issued material, which is 200 kg. So you will ask me, said, sir, at how much price we have issued this material? So it is same 12.88. So 200 kgs will be issued at $12.88. So 12.88 multiplied by 200 will be $2,576. So this is the issued price of the material. Got it? So just simple. So PW is more simpler than CWA. Got it? So this is all about the inventory valuation method. This is all about the inventory valuation method. And by this we have completed our chapter number 2, which is the material. Which is the material. Where we have covered what is purchase of material, then we have covered what are the accounting entries for the material, and also covered what are the process for the purchase of material. Then we have covered what is inventory control and costing system. Then we have covered recording of inventory. Then we have covered inventory control. Then we have covered inventory discrepancies, and then we have covered inventory valuation methods. These are the topics that we have covered in this chapter in the 2 classes. Got it? So what is your task? Your task is to first complete this lecture. Then after completing the lecture, go for the notes. Read all the notes carefully, because reading is more beneficial than anything else, because whatever I will tell you is beneficial to you, but whatever you read is more beneficial, because when you read by yourself you are going to understand everything in more clarity. So just go through, read all the notes. Then if you have any doubts, then feel free to message on the WhatsApp group or on the my personal chat. Okay. Then your second task is to go through these board notes. I am going to upload every board notes with the class itself. So go through these board notes, and after going through these board notes, go for the next class where we are going to solve the question. Okay, there may be the chapters where I am not going to solve all the question, because I may provide some question to you as a homework. So just don't skip the homework. At least try to solve the question. If you try to solve the question and even if you don't get the answer, I am still more happy, because you have tried. So every time you go to try the homework, and if you are going to not get the answer, just feel free to message me and ask it out, so that in examination you don't going to regret your decision. Okay. So this is all about this class. We will see you in the next class. Till then, see you. Bye bye.